What's one of the fastest growing companies of all time, still growing at a tremendous rate even now, and has fundamentally reshaped the way we do money online? That's right, today we're looking at PayPal and how PayPal is getting even better. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Back in 1998, three guys named Max Levchin, Peter Thiel, and Luke Nosek started a little company named Confinity, which would later go on to be renamed to PayPal. These three guys should sound familiar as being associated with the PayPal Mafia, a group that has been responsible for some world-changing companies. Peter Thiel is the current CEO of Palantir, which has had a large media presence recently. Meanwhile, Max Levchin and Luke Nosek have also been working away, creating and building companies like Slide.com, Affirm, and Yelp. In fact, Nosek is what you could call an angel investor and founded the Giga Fund, a venture capital fund that invests in space companies that are going to the moon and beyond. Speaking of going to the moon, join Dollars and Cents Journey to the Moon by liking and subscribing and joining the Discord, link in the description. These are just three of the quote-unquote PayPal Mafia. All in all, there are 12 members, and although we won't go over each one, I would like to mention just a few of the companies that have come from this group. Think along the lines of Tesla, LinkedIn, Palantir, SpaceX, Affirm, Slide, Kiva, Yelp, and even YouTube. All of these have been founded or co-founded by members of the so-called PayPal Mafia. In all this, I haven't mentioned the one person you're thinking about, Elon Musk. By far, I would say he's the most prominent member of the PayPal Mafia. His association with the group happened when his then company X.com merged with another called Confinity to become PayPal. In 2002, PayPal went public, and eBay, who I've talked about in my last company-focused video, bought it for $1.5 billion. As a subsidiary of eBay, PayPal grew tremendously until it spun off from eBay in 2015. Again, years later, PayPal is its own public company. Since its IPO in 2015, this PayPal has been one of the best performing companies over the last 5 years, with a 600% plus return in the 6 years since its IPO. With that brief bit of PayPal's history, let's get into the real meat of this company, its financial health. If you want to know how I value companies, the reason behind what I look at when I look at a company's financial health, check out the box in the upper right corner of the video, How I Value Companies. PayPal's market cap stands at just over $300 billion, putting it in the top 20 companies of the S&P 500. PayPal's PE ratio is also at 57, which is incredibly higher than 20, my goal for PE when valuing a company, though I don't really pay much mind to this ratio. PayPal's revenue over the last 5 years has been increasing, going from $9.2 billion in 2015 to $21.4 billion in 2020, no doubt bolstered by the unfortunate events of 2020. Now let's take a look at PayPal's shares outstanding. Looking at the numbers, it appears that the numbers are decreasing, going from 1.22 billion to 1.17 billion in 2020, a good indicator that PayPal is buying back shares. That's a healthy sign, though I am somewhat surprised to see it considering PayPal's explosive growth. But really, what else are you supposed to do with the mountains of cash you're raking in? On to total current assets versus total current liabilities. PayPal's total current assets totals $53.4 billion against its total current liabilities of $41.3 billion, with $13.1 billion in cash on hand, not enough to pay off all those liabilities. Honestly, I'm a little surprised here. Usually these high-margin, high-growth companies like PayPal have almost no liabilities and tons of assets, but I guess that's just PayPal. Time to look at PayPal's free cash flow, or FCF. Good thing here is that it's been increasing by tremendous amounts, once at $1.82 billion in 2015 to $4.99 billion in 2020. Now, we just multiply the average FCF over the last 5 years by 20 to get an expected market cap of $71.4 billion. This is well below our current market cap of $300 billion. Of course, the last two things we'll look at are ROIC and dividends. PayPal has an ROIC, or return on invested capital, of 20.5%. This is solidly above our goal of 10 and somewhat expected from the fintech giant. However, sadly, PayPal does not pay a dividend. All these numbers indicate that PayPal is exceptionally strong in its financial health, but I think the stock is still exceptionally overpriced. If PayPal stock ever falls to the $85 to $90 range, I'll certainly be a buyer. I know it seems unlikely that this could ever happen again, given the numbers and how I've, said it's poised to continue growing at tremendous rates. But think about this. Just last year, in 2020, one share of PayPal dropped down to $90. Go back further to 2019, and you might rethink that unlikelihood. I think that with a sizable correction, this price is perfectly attainable. With all that financial stuff looked at, it's time to ask the question, what does PayPal actually do? You may already know the answer to this. Primarily, PayPal is a service that allows users to securely send money across the internet with just an email address and has become the primary mode of exchange on the internet since its inception. This has led the payment processor to enjoy a huge slice of the global online payment ecosystem. In terms of market share, PayPal is a whopping 54.5% of the total online payment space. Its closest competitor, Stripe, only occupies 18.6% of the space. Amazon rounds out the top 3 after Stripe, with Amazon Pay only occupying 3.7% of total online payments. And looking at actual payment volume, PayPal is responsible for about $936 billion in payments every year. Almost $1 trillion flows through this company. Now, this may not seem like a lot compared to the other big players in the payment processing space like Visa and MasterCard, but I think it's also important to remember that these two others are Visa and MasterCard. These two titans are responsible for a majority of payments for everything around the world. I think it's an absolutely remarkable testament to PayPal that it's able to knock on the doors of these behemoths in the payment space. Also, PayPal's business model is super simple, just like the aforementioned payment processors Visa and MasterCard. Just link a credit card or bank account to your PayPal account and you can send money securely online to almost anywhere in the world, for a fee of course. PayPal makes most of its money through fees for processing transactions. This fee is menial, usually about 30 cents plus 2%. This fee is applied seller side and stacks up really well against the competition, see on this infographic. The low-fee, frictionless payment platform has worked really well for PayPal so far, and I would venture it will continue to work well in the future. So now we must ask the question, where do we go from here? What are PayPal's big growth plans? And that's another great question. It's got a really long answer with so much going on. For now, I'll just stick to the big things. First up, acquisitions. PayPal certainly learned from eBay when it comes to picking up seller companies. Back in 2008, PayPal acquired Bill Me Later, which was transformed into PayPal Credit and acts much like a credit card. Then, in 2013, PayPal purchased Venmo, a sort of gimmick PayPal that still focuses on payment processing, but with a more social environment focus. PayPal paid just $26 million for Venmo in 2013, and today it's valued at $38 billion. Not bad. The greatest acquisition came in 2018 with the purchase of Honey. Many of us know the coupon app notorious for sponsoring YouTubers, and many of us have also added it to our browser, me included. Yet acquisitions are not the only thing that PayPal has done well. Its innovation department is certainly charging forward. A recent feature PayPal has added is Buy Now, Pay Later. This allows customers to pay in installments over time rather than paying everything up front. It works a lot like other financing companies like Progressive Leasing, Affirm, and Afterpay, and it seems to be working. Another innovation is PayPal's foray into the world of cryptocurrencies. Recently, PayPal offered the ability to buy and sell crypto on the platform. In addition, PayPal users can now pay with crypto in their account. As you check out, you can choose to convert some of your crypto into cash and pay as you normally would. Right now, you can only buy the larger crypto networks on PayPal like Bitcoin and Ethereum, but it's still a really interesting feature that I'm sure many didn't see coming. An interesting thing to note is that PayPal was originally started in an attempt to make the first digital currency. In an interview with co-founder Luke Nosek, he stated that the original aim of PayPal was to create a digital currency similar to Bitcoin. Unfortunately, PayPal became too centralized and too attached to the large financial companies like Visa and MasterCard and switched directions. One of the last interesting things I learned in my research was that PayPal is looking into ways to give its users the ability to buy and sell stocks on its platform, much like M1 Finance or TD Ameritrade. An all-in-one place to do finance, you could say. Really, that's part of what makes PayPal so great. In this world of companies making the push to become an all-in-one place to do finance, there will be many winners, and PayPal will certainly enjoy a large slice of the pie. PayPal is already a massive company that has proven itself to be reliable. Why not also trade stocks or buy crypto? Why not also have your bank account through PayPal? Linking all these things together and centralized in one app. This is an argument similar to the one I made in my video about Apple. What PayPal is trying to do is similar. Instead, to become a seamlessly interconnected center for personal finance, PayPal already has a proverbial foot in the door with over 350 million users using its services already. While I won't be buying the stock right now until it gets to the sweet $85 to $90 range, I think PayPal is well on its way to evolving into a bigger financial powerhouse, rivaling the likes of Visa and MasterCard. PayPal is a sticky business strategy, one that'll let the company grow tremendously in the coming years. Honestly, I wouldn't be surprised if PayPal destroyed its goal of 750 million users by 2025. Regardless, I believe that PayPal will soon cement themselves as one of the great financial institutions of this generation. With all that said, I hope you all enjoyed this video about PayPal. Until then, I can't wait to see all of you in the next episode of Dollars and Cents.